I think, Mark, should we get started?
Let's do
Cool.
it.
All right. Well, thanks everybody for joining us. See some familiar names on the call, which is always great. Today is going to be a pretty informal discussion. The intention of our call today is really just to go over some best practices for year end. Hard to believe that it's almost 2025, but here we are. And there's a lot of us that say a lot of the accounting things right until the end of the year. So Mark and I are going to go through some things to keep in mind, and then we'll just kind of open it up for discussion and any questions that you guys have. So should be a fairly short session today, but hopefully full of some good value for you. So with that, Mark, do you want to kick it off with the
Let's
first
do
tip?
it. So yeah, thanks, Betsy. So we wanted to keep this and in a format that's easy to follow through on. We'll share our list with everybody who's on the call after the call, and we'll share with it with our on our blog and everything on our YouTube page. You'll be able to absorb, digest all this content later. So just keep that in mind. As we were talking about this webinar, um, we see a lot of things that business owners wait until the last minute to do. And really, December is the best time to tackle a lot of those things because you can't really prepare for tax season in January because tax season, your window of opportunity to do things for your 2024 tax season ends on December 31st. So it's really best to kind of have those things in mind as much as possible before December 31st. It also gives you a little bit of an advantage. And we wanted to gear this kind of toward cannabis businesses as well. Specifically, we know also in the Minnesota market, even though there's a lot of uncertainty of when there will be licenses issued, we just had that press conference in Minnesota today, earlier today, that kind of gave a little bit more clarity on the timeline there, but also left a lot of things open. We even with all of that said, the one thing that remains constant is as taxes. And so when Betsy and I were talking about this, we wanted to kind of keep this as a top 10 list. So we'll go through our list, top 10 style, and we'll just kind of go back and forth. And again, like I mentioned in the chat, if you have questions along the way, add them in the chat. We'll address them there, and then after we're done, we can also open up mics and let you guys talk, ask us any questions that we have. So without further ado, number 10 on the 10 things business owners should do before year end is reconcile all of your accounts. So that is everything on your balance sheet and everything, and specifically if you had to pick one account to reconcile, it's going to be your bank account. So hopefully you all have real bank accounts set up with banks that are banking with cannabis, and when you do that, you have monthly bank statements that you get from them. So the most important way to make sure that your books are solid is starting with the idea that everything that is in your bank account, all of the deposits, all of the expenses, all the payments that you've made, tie out to what is in your financials. That is the number one thing anybody who is going to look at your books is going to want to know is your bank account reconciled. That's also going to take into account credit cards and loans and anything that basically relates to your accounting for your business. I was just talking with somebody this morning about this, this particular situation, and we were reminiscing, or we were lamenting it when we see clients who come to us and have all of their transactions on PayPal or Venmo, and those are just like uh, they're painful to reconcile on the accountant's end. And they've just put you in a bad spot if you don't have things kind of lined up right away. Betsy, I don't know, I'm sure you've seen that too,
Oh,
that kind of
yes.
thing.
Yeah, absolutely. It's really the only sure way to make sure that all your income and all your expenses are accounted for. So it's definitely the first step. Um, and then anything else to say on that, Mark?
I don't think so.
Right.
That's a great place to start though.
So the next one, which is particularly important in the cannabis industry, is reviewing and adjusting inventory. So absolutely, at least conducting one physical inventory count a year, which should take place at the end of the year, to ensure that the books correctly reflect the inventory that you have in store. It's also great to determine, I mean, sometimes there you can identify through that process issues in how you're recording inventory on the point of sale side as well. So it's just a very good practice to have, especially when in cannabis, you can only deduct your cost of goods sold. So you really want to make sure that that number is super solid.
Yeah, we were just working with a client this morning where we literally had the situation where they looked at their balance sheet account and saw inventory was one number, and on their POS system it was a different number. But because we've been doing that proactively with them throughout the year, we could easily pull up both reports and do a quick analysis and find what the discrepancies were. That's really where you want to be. You always want to be in a position where if you are, kind of where your accounts are, and if they are off, which they will be, that's just the nature of running any business, is there's always going to be times where you have to reconcile things that you can't run it through chat GPT to solve everything. There's going to be those situations where you're going to need to have human intervention. We'll talk a little bit more about those kinds of tools later if we have time, but that human intervention to say, to look at your inventory count, to do a physical inventory, again, that's going to be a super important element of your year-end books. And like Betsy said, a huge component of how you are taxed as a business, as a cannabis business owner, because as of today, cannabis is still not Schedule 3, and so it is still federally illegal, and so 280E still does apply. Number 8 on the list is organize and review financial statements. And so this is, we talked about kind of the big ticket items first here, the things that you really want to make sure that you have in place. This, I think, it's very important to do this if you haven't done this already, is to kind of think about what does your P&L look like? What does your balance sheet look like? And if you have accounting software, organizing your chart of accounts in a way that is easily readable and is set up in a way where you can expand or retract the number of accounts that you are working with. So we at M&W this year, after working with charts of accounts and P&Ls and balance sheets for a few years, we put together our own chart of accounts that is really customized in that way to ensure that when we onboard clients, we start with that kind of the bare bones piece of that chart of accounts that is organized in a way so that it also translates really well to a balance sheet and to a P&L. And so having that organization from day one is really important, because if you start with working with, say, a chart of accounts or a balance sheet that doesn't really reflect how your business operates, and 6 months down the road you realize you want to do something different, like if you say, okay, I'm selling a lot of flour, but I want to know specifically, like, break down the amount of flour that per strain or something like that, or you want to be able to track discounts by type of product that you're selling. It's much easier to do that if you start from the basis of I know I can expand or retract this as I go along, but I have at least a template in place. So we use primarily we use Xero for our accounting. We also use QuickBooks because we know that there's going to be business in people that prefer one software over the other. We try to get people on Xero, but we also, the reality is that we need to be flexible and be ready for both. And yeah, really your success or failure in having a good P&L, good financial statements, it doesn't really matter what software you use. It matters a lot more about how you set things up and how you think about your business. So, and then one last thing there is having your financial statement set up in a way where you can easily estimate what your taxes are going to be throughout the year is vitally important, especially for businesses that are set up as C Corps that have to pay estimated taxes during the year. So that's going to help you immensely in being able to stay ahead of the game for paying your taxes throughout the year, because one thing that is misunderstood frequently is you don't pay taxes at the end of the year. You actually pay them during the year that they happen. And even if you pay the right amount of taxes at the end of the year, the IRS will still penalize you, 99 times out of 100 if you haven't paid your taxes during the year. So I went in a lot of different directions there, but the main thing is you have to start with that organized financial statements.
Yep.
You
Another
see
thing to
that
think
all the time too, Betsy, right?
Oh yeah, absolutely. Yep. Another thing to think about too, which is especially timely, is ensuring that you've accounted for all contractor payments. So if you pay contractors over $600 in a year, I believe that's still a threshold. You do need to issue them a 1099, and that needs to be issued to them by January 31st. So oftentimes people are either just not issuing them at all or really having to scramble to get those 1099 payments out in time. So just make sure that you, number one, have accounted for all the payments. Also that you have a W-9 on file for that vendor, because there are some vendors that you may think of as a 1099 contractor, and they are to you, but you actually don't have to send them a 1099 because of their entity type. So for example, S Corps and C Corps, they do not need to be sent 1099s, whereas sole proprietorships, partnerships do. So something to be thinking about, and hopefully you can kind of get that organized before the end of the year so that you aren't scrambling in January to get it done.
Yeah, and that's one of those things that you can easily get dinged on if you don't do it. So it's I always think of in accounting, there's a lot of things like running your payroll on time that and I think 1099s and vendor payments fall into this bucket, that if they are working well, you don't ever hear about them. And if you hear about them, it probably means there's a problem. So we want to help you make sure that you're avoiding those problem situations. Let's see, what number are we at? That was 10,987. Number 6 on our top 10 list. I'm a big fan of top 10 lists, if you can't tell. It's I was trying to think of like, can we tie this into like a Spotify Wrapped style list?
Or Casey Kasem or something.
Casey, yeah. Shadow Stevens, we're dating ourselves right here, Betsy, but it's all right. So number 6 is to plan for 2025 estimated taxes. So like I was mentioning earlier, your quarterly taxes, and this is especially true if you are a C Corp, they are due basically quarterly. So if you are a 12/31/2024 year end, you should be paying quarterly taxes this year for the year that you are about to file for. So if you haven't made quarterly estimated payments this year, try to get them in as soon as you can. The last quarterly date is December 15th, I believe, which actually falls on a weekend this year. So it's going to land on December 16th, actually, the Monday after. But keep that in mind for this year and ongoing years. And again, having that P&L that shows you where you're going to land or where you expect to land is vital to be able to do that. If you are a partnership and your income gets passed through to you individually, you may still need to make estimated payments. It just depends on your personal tax situation. So, you know, on an individual level, there are so many different ways that you can be set up where you might have yourself as a business owner and then a spouse or you know, a partner as a W-2 holder. Whatever your situation is, you just want to make sure that like what the IRS always reminds you is an extension to file is not an extension to pay your taxes. And what people often forget, but is true, is that your taxes are actually due during the year that it is happening. When you pay your taxes at the end of the year, typically when people think about paying your taxes on April 15th, that all that is either you are paying in the rest of your balance that is due, or you're getting a refund for what you've already paid in. So that's a common misconception in tax that is really important that you do well, especially in cannabis where you know, tax is really heavily scrutinized.
All right. The other thing to think about is verifying payroll compliance. So just make sure that, I mean, a lot of small business owners will utilize electronic payroll systems, which makes things easy. But if you happen to run any payrolls outside of that payroll system, for example, you do want to make sure that you have that recorded. You can usually record prior payrolls in your payroll software, but you just want to make sure that you've got everything recorded so that number one, you ensure that you've paid the right amount of payroll taxes and filed your forms correctly. But also that if you have W-2 employees, that they will receive the correct information on their W-2 at the end of the year, because you know, you'll definitely hear from them if they don't. And those W-2s need to be in the hands of your employees by the 31st of January, which is the same deadline as the 1099 forms.
And shout out to Matt, who I see here from Paragon Payroll. They do a great job on payroll in the cannabis industry. Definitely cannot say the same for a lot of other payroll companies in the space. So yeah, if you can get yourself a payroll company that also likes working in cannabis, that's really, really helpful.
Mhm.
Number 4 is review sales tax reporting. So this is another area we see where if things are going well, you don't hear about it, and if they're not, you hear about it. And this is maybe one of the most common errors that we see, whether done, you know, correctly, you know, with intent to not file or not. It doesn't matter if you either aren't able to or don't know that you need to file sales tax. Sales tax in any state that you're in is usually one of the easiest catches that state departments of revenue have to essentially put the hammer down on you. So if you are not filing sales tax or you are not paying sales tax, that's something that state revenue departments can catch up to very quickly and put a lot of pain in your business, honestly. So make sure that all of your sales taxes are, first of all, filed, that all of your sales tax returns are filed. Depending on what type of business you have, it may be quarterly that you need to file, it may be monthly that you need to file, but that needs to happen for sure. And again, if you don't file, letters come very quickly if you haven't filed sales tax. And then 2 is pay your sales tax. And it is, you know, going all the way back to reconciling your accounts. You have to know that when you are selling cannabis or anything in your stores, that the cash you collect that includes sales tax is not yours. It's should never be classified on your balance sheet as your money in full. In fact, when you file your, when you go about doing your accounting throughout the month, that money should always be reserved as a sales tax payable that you are collecting, and it should never hit your P&L. It should never hit your cash flow assumptions that you're going to be able to keep this cash. It's not your cash. So make sure that you have that in place. In Minnesota, sales tax reporting is tricky because whereas most states you can kind of report in full on your sales tax, Minnesota has different sales tax rates in every zip code of the state. So it makes sales tax reporting very intricate. And it's one of those things where it's not going to add a whole lot of value to your business. You're not, doing this to do forecasting on how well you're going to be doing in the next, 5 years or so. It's strictly a compliance thing that you just have to do. So yeah, I can't say it strongly enough. Make sure that you are compliant with your sales tax.
Smart. Reviewing and cleaning up fixed asset records. So if you purchase assets throughout the year, you do want to see those on your balance sheet. And you want to make sure that you've recorded the correct purchase price amount. If there's any assets that you sold throughout the year, you also want to get those off of your balance sheet. And the benefit of keeping good records of your fixed assets is, of course, not always the case for cannabis businesses, but there is a tax benefit. You do get depreciation on your fixed assets. So you do want to make sure that those are recorded correctly, and you're keeping track of when you buy and sell those assets. So Mark, I don't know if you have anything else to say about that.
Yeah, I mean, I think I'm thinking about how, obviously cannabis is a very equipment and fixed assets heavy industry, whether you're opening a dispensary or a manufacturing business. Dispensaries have a ton of security that they need to put into their stores. So that is, you're building out fixed assets for that. And that you are assuming that when you build out those big time facilities, that those are going to last you for more than 1 year. They're going to, in some cases, 5, 10, 15 years. So just from the standpoint of kind of thinking about your capital improvement schedule, having that fixed asset record keeping, especially if you're in it for the long haul, is really important. Because if you are, let's say you're a manufacturing company and you intend to be doing this for the next, 15 to 20 years, you want to have those fixed asset records so that you can plan for replacements for different types of machinery or different, facility upgrades that you might not be able to afford or might not need to afford now, but can think about it, down the road. So it goes in a lot
Yeah.
of different directions. Yeah, not just short term, but that can be a very long term planned opportunity for you. The other thing
It
is
also,
that, oh, go ahead, Betsy.
I was just going to mention too, it also is, it looks good from an outsider perspective to have more assets on your balance sheet. So it's another incentive to make sure that it's getting there.
Yeah, that's a really good point. And if your goal is, say, just to build a really good business and sell it in 5 years, that, having fixed assets on your balance sheet just enhances the value of your business for sure. The other piece is, as of now, like Betsy said, like there are some opportunities where you can use depreciation for a tax deduction in certain situations if you are a manufacturing company or a cultivator that the use of the equipment is specifically tied to the production of goods. There are some opportunities there, but we also could see, as we watch for 280E rescheduling to happen, you always want to be prepared for if there are new tax opportunities that come up. It's a lot easier to be able to take advantage of them if you have a strong accounting system on on everything, but especially in fixed assets where big dollar amounts could add up to a lot of value. I would love to see if we get rescheduling in the next year or so, and we get the green light to do this. Like if cannabis business owners could use Section 179 to write off the cost of big equipment purchases in the first couple of years, that could end up being a really advantageous tax selection that isn't really available to us right now because of 280E. So there's still a lot to happen there, but hopefully we'll see some positive developments. Am I going now, Betsy? Is that my next?
I can talk about end of year
Okay.
financial opportunities. So
Yeah, go for it.
obviously the big thing that people are thinking about this time of year is how can I reduce my taxable income? And for cannabis businesses, there's definitely less flexibility, but if you are a small business in any other industry, something that you could consider doing is prepaying expenses this year. So if you have, let's say, an insurance premium that you could prepay, say it's due in January, but you've got the cash to pay for it now, do that. Obviously, there's kind of that balance between cash in the bank and do I want to use up my cash now, or do I want to do I want to save my cash and maybe wait to maximize my or minimize my taxes? There's always kind of that balance. So there's really it's definitely not black and white, but those are, that is something to consider is you could prepay some expenses. You could also, if you have a retirement plan in place, there are retirement plan options for even individual businesses of one, up to small businesses up to large businesses, of course, but making sure that you're maximizing your retirement contributions. Again, pending that you have the cash available. Also, I guess from more of a cannabis perspective, identifying and writing off unusable inventory. So if you have inventory that is no longer sellable, maybe it's slow moving or maybe it's expired. Make sure that that's identified so that your inventory balance can be reduced and um, consequently your COGS number can be increased. Mark, do you have any other tips or suggestions of different tax saving opportunities?
Yeah, I mean, really for individual filers, most people, even if they own a cannabis business, it's not going to be their only stream of income. So even if you are investing in a cannabis business, you can think of that investment, that vertical, so to speak, is treated in that capacity, but you may have other things on your individual taxes that are not subject to 280E. So I hear a lot of questions about, for people concerned about getting into cannabis that if I work in cannabis, does 280E apply to everything? And that's really not the case, especially if you are an individual filing your own tax return. You just have to look at your individual case as piece by piece, essentially. So even though there's a lot that you don't get to take advantage of as a cannabis business, you as an individual taxpayer still have all the rights that any taxpayer has, and you just have to make sure that you're prepared for that. Okay, we're down to number one, and our number one item to think about as a business owner is just a plan for 2025. And that's a big bucket, but really you should be thinking about 2025 right now. And if you have the ability to create a budget or create a cash flow projection, do that now and think about it now, because once you are in the heat of the business, it's much harder to do that. And especially for our folks in Minnesota who are trying to get things started, and in some cases we might be seeing applications going out this year. and hopefully accepted at some point this year. It's a lot easier to plan for the year ahead now when it's a relatively quiet period. Obviously, it's not that way for everybody, but if you're on that kind of beginning cusp, this is the best time to really start thinking about that. And the good thing is there's a lot of different ways you can do it. And if you have all of the things that we talked about earlier in place, it makes the creation of those budgets much easier to do. Because if you have all the structure in place, you have your fixed assets, you have your chart of accounts, you've been paying your vendors, you've got your payroll compliance, sales tax compliance all set up. Now it's time to really think about how you put those numbers and how do those numbers tell a story that is a successful one for your business.
Yeah, and one thing to consider is that you can always create a couple different scenarios. You can create a scenario of maybe no growth or little growth, and then another scenario where you have significant growth. So
Mhm.
that's what we typically like to do for our clients, just to kind of show them, give them something to strive to, but also something that might be more grounded in reality, or kind of like what is our more worst case scenario, and that way they feel prepared for both.
Yeah, kind of doing that best case scenario, worst case scenario, realistic case scenario. So that's the worst thing that can happen is that you don't do that and then you run out of cash and then you can't really do anything once you're out of cash. So cash is king, as we say.
So with that, did anybody think of any questions as we went through our tips here? We have a quiet group today.
Yeah. Um, well, y'all think about that. I want to think about, you know, what are your thoughts, Betsy, on um, like different systems that cannabis business owners use, like from an accounting standpoint? Like, do you see and I have my own thoughts, but like I know that like we all want every type of accounting tool to work together perfectly, and just push a button and get your financials done. But that doesn't seem to be the case. Like, what are your kind of some of your thoughts on like using tools, using accounting tools to do the job?
Yeah, I mean, I think with technology right now, there are tools that can do some of the work for us, but not all of the work for us. So I still think you need a qualified individual. I guess the example of accounting, you could have software that um, makes an accountant's job easier, but doesn't replace an accountant. I've definitely been in plenty of books where a business owner has tried to do the books themselves, and I think they've almost been given, because of some of, say, QuickBooks features, like how it tries to um, predict the code for certain transactions. I think it's almost given people too much confidence,
Mhm.
and I still think you really need someone with an understanding of what's actually happening behind the scenes of the software in order to execute it well. Unless you have really straightforward books, all the money that's coming in is income. All of the
Mhm.
expenses that are coming out are expenses. Unless it's just that straightforward, then yeah, maybe you can get away with doing it yourself. But I definitely think utilizing technology in combination with someone that has a good skill set is worth it as business owners. Usually this is why we're having this conversation, is because a lot of this stuff kind of gets it's always the intention of the business owner to take care of their financials throughout, but it's usually something that gets put on the back burner um and creates a lot of stress for the business owner to try and figure it out before year end. So my advice is always just to have a professional do it for you. I don't know if I
Matt,
answered your question, Mark, but
yeah, no, that was great. Matt asked, is QuickBooks Desktop being discontinued and causing everyone to go to QuickBooks Online?
yes,
I think they
it
are, right?
is. Yep.
Yeah.
Yeah. In fact, I know somebody that just got put onto QuickBooks. They were forced onto QuickBooks Online after being on desktop,
Mm,
but they weren't happy about it because I think there are some people who really love desktop and they really they just don't want to learn QuickBooks
yeah.
Online. But I I believe that once they understand how much easier QuickBooks Online can make their lives, um, they'll come to love it. But
Yeah.
long-winded answer, yes, they are discontinuing
Mhm.
desktop.
And the reality is too is that accountants more and more are moving to the cloud where you're in 5 years, I don't think you'll see many accountants, if any, in any industry actually sitting in your office. And so it kind of makes something like a desktop version of your software um, not not really viable anymore. Obviously, there's always ways that you can get into it, but um, they're tricky. So it's software as a service is definitely the way things are going, especially in the accounting industry. So I would definitely start with anybody going on the cloud. We use Zero as well, and Zero is designed to be on the cloud and was created that way from day one. So tools like that are very helpful, and we are seeing an evolution of accounting tools, especially ones that have AI built into them that are they're not necessarily replacing accountants yet, but they are definitely supercharging the way that we do business. I was like last week, I was totally geeking out um, in our team's Slack channel because I was finding that I could go into somebody's bank feed and just copy and paste the bank feed notes, which usually, if you just read them, they don't make any sense to humans, and put them into ChatGPT, and it spit out the answer of who that vendor is with extremely good detail. Where it seemed like, okay, I'm gonna guess, maybe this makes an error once in a while, but like 99 times out of 100, it tells you who the vendor is. That is much more powerful than like what Betsy, like what you were saying, where QuickBooks now will kind of guess what code things go to. I think that's one of the most dangerous things that they have
Mhm.
that's available, where like the all you want to do is like if it says like a code and you want to just click OK to that, I would say more than 50% of the time it's going to
Yeah.
be wrong. So
Yep. 100%.
Laura asked about some upcoming dates that are going to be important to think about as a business owner. So like I mentioned earlier, December 16th is the quarter four um, due date for your estimated taxes. Um, December 31st would be the day that if you have any um, if you want to establish any type of retirement plan, you need to do it by December 31st. And then big one that's a big talker right now is the Corporate Transparency Act. The registration deadline as of right now is January 1st, 2025. That being said, there is a federal injunction on that ruling right now. So the general consensus is maybe wait until there's more action there, but stay abreast of the situation because it's a temporary injunction. Morem Waller, we've taken the position where we're not filing any of those Corporate Transparency Act registrations, but we're just making sure that our clients are informed about that. Yeah, Andrew says if QuickBooks Online and QuickBooks Desktop had all the same functions, the transition could be much easier. Yeah,
Yeah,
that's true.
definitely. Yeah.
Very, very true.
And I just want to make one point of clarification, Mark. I think you just misspoke slightly. The
Mm,
Q4 estimated payments actually due January 15th. So there's a lot kind of due in that January period.
For corporations, though, it is December 15th.
Okay, so for individuals, yes, so for
Individuals is
individuals,
January. Yeah.
thank you, yeah.
Yeah.
And then end of January, you want 1099s and W-2s issued if you're working with contractors or if you've got employees. And then partnership returns and S corp returns are due by March 15th. Right, Mark? You're more of our tax guy.
Yep, you got it. And then corporations and individuals are April 15th. So it's all going to be coming at us very soon.
Are there questions that came through?
Not as of now. Well, great. Well, thank you so much all for your time today. Please feel free to reach out, check out our websites for more information. You can check out our YouTube page, our Instagram page. And we have a newsletter as well. You can sign up to our newsletter at our website. It is moremwaller.cpa. And yeah, I hope you are all ready for things to come and have a great rest of your month. And we will talk to you soon.
Thanks for joining us.
Thanks all.